Starting on the daily, what we can see is generally we are very, very bearish. There's clear breaks of structure following a heavy bearish downtrend. But if we were to look to the 4-hour, what we can see is market has been ranging for a while. However, we did have this bullish outbreak and then a retest of those lows. So I am seeing a Wyckoff accumulation schematic, and I do believe that we can see the US dollar move down on the 4-hour time frame. We can see those drops start to come in soon. Now, if for those of you who don't know what an accumulation and distribution of Wyckoff is, I'll quickly show you a Wyckoff distribution schematic for the DXY. Now, as you can see, you have your preliminary support, buyer's climax, automatic rally. So I'm looking at preliminary support, buyer's climax, automatic rally. Then we're looking at secondary test and then sign of weakness. This is my secondary test. This is my sign of weakness. And then looking at an upthrust. We're looking at some heavy upthrust over here. And then we're looking for a bit of a drop. So we could consider that to be upthrust. However, it usually is the highest point. So after the upthrust, what do you see? You never break the upthrust. So we are intending to see like a rounded retest of the area before a drop. So we are intending to see a zone form in here somewhere. We are intending to see kind of like a rounded retest and then a drop, and then those other phases play out and then going straight down from there. That's what we're kind of working with on the US dollar. Now, looking at Euro US dollar, as we know, they're inversely correlated. So obviously this will be doing the exact opposite. So this would be your preliminary support. This would be your seller's climax, your secondary test, your seller's climax, your automatic rally, your secondary test, sign of strength, and then your upthrust could be somewhere around here. So we've got to really be careful of that. We don't want to rush into any trades yet. We want to really analyze the charts step by step. So as you can see, we're on the 4-hour. What we can see is this wick created some liquidity, and that liquidity got tested, and when we moved off from there, we also have these supply wicks in here. They failed to achieve anything. Do you see a big rejection? No, you see a short-term move, but then we're continuing bullish. So chances are this could run as liquidity. And we're looking at just sort of maybe just a bit of a range here, then just a push straight up through. But of course we don't know for sure yet. There's not enough heavy analysis to tell us that that is correct. We did have this wick in here, which was also a liquidity wick. That also got retested at this point over here. So we've kind of acted out on that, and that took out our point of liquidity as a sweep. There was liquidity built below these lows, and that liquidity got grabbed by this low and we moved off. We could say the same thing happened to the upside as well. This was kind of a liquidity sweep, and that's where we swept, we came back in. Same thing, we swept and we came back in. So essentially what I'm looking at is kind of like bullish market structure, because we've had that sweep to both the upside and the downside on the 4 hour, but the most recent sweep was to the downside, so I'm expecting upwards momentum. We've gone into a bit of a range, we've come back up, we're causing minor changes of structure, so we do need to be careful, right? So it is very unclear on what to do this point in time. Now maybe the 15-minute will give us some clarity. So looking over here, what can we see? We can see this sort of area. It was caused by this supply chain over here. That was an extreme supply chain mitigation. As we can see, we are kind of forming a down move. We created that area, came down, created that area, came down, retested to that area. It came down, we retested this area. So as you can see, although it may not be the clearest, you need to train your eyes to see this. You can see that we've had that mitigation, and now this is our new mitigation zone. So we did mitigate that. The swing low over here never created a new high. It reacted off a supply chain, making it a weak low. So I'm going to mark that up as liquidity, essentially, because it is an area to be taken out. So we'll mark that up there as our target if we were to take sales. However, we are heavily in bullish control, because as you can see, this supply chain over here, yes, we reacted, but did we form a new low? I don't think so. Potentially on lower time frames, we were forming new lows. However, on the significant time frame, not much to look at. We do have this point of interest in here. We do need to be careful. The market is bullish. I'm also seeing liquidity wicks form. I'm seeing this sort of area as a potential zone. I'm also seeing this area as a potential zone. However, we've mitigated this area, so this isn't one we need to worry about. That was clean mitigation. We broke structure, we came back, and we moved off now from new structure, but there is liquidity under these wicks. So I am expecting probably some sort of retest, because supply is still in play on the 15-minute. However, we did not form that new low, so it could indicate that we're looking at a shift soon. But I do think we could get up to here, come down, take out this liquidity, retest our area before moving off to high areas. So such as maybe trying to fill in, let's look at the 2 hour. Yeah, maybe trying to fill in this area of liquidity there, potentially. I want to be very precise with this to ensure that it does get to our area. Yeah, so I'm going to put it as this. So we're looking at a fill of this. So we could, if we were entering directly off the 15-minute, which we should never do, we could be looking at a trade that looks somewhat along the lines of this. Target a new low, essentially. New high, sorry. As this is a weak high because it didn't form a new low. And clearly we are looking to enter into London session in about half an hour, where volume will spike. Potentially we could just see a break of that high straight up, but then this trade would be invalid because a break of structure would have already formed. the liquidity isn't in liquidity areas aren't essentially areas where price needs to go to grab the liquidity. Eventually it will go there, but it might come back there in 10 years. So there's no obligation for price to break high and still need to come back low. The thing I'm seeing that could indicate will come back is huge imbalance over here. This is why I think price will come back down, not because of the liquidity, it's because of the imbalance formed. So if we're looking on the 1 hour, for example, you can see we've had a huge region of imbalance. We've just had that impulse move, and that gap has been left between this wick over here, but also this wick over here. So I don't know if that's very clear. I'll just mark that up a bit weirdly. Yep, so between that wick and that wick. So we formed an imbalance. And price always does look to come back to the imbalance. It doesn't always look to come back to liquidity. Heading back over to the 4 hour, you can also see there was this original imbalance. Price never needed to come back down because it had already got above our kind of supply area. However, because of that imbalance formed, it filled that imbalance. Imbalances are always filled. So that's the reason I expect price to come down. So we will be monitoring this trade. Yeah, so this is kind of my trade idea. However, it will be a much higher risk to reward as I'll look to enter off with the 1 minute. But in potential short-term entries, first we need to quickly have a look at our calendar. Just refresh. It is a Tuesday today, so we are kind of looking at a bit of news on the euro. Next news is at 9 a.m, so I could potentially be entering at London Open to enter the London kill zone. Then 10 a.m, bit of medium impact news. US dollar. It is a bit of a busy day in terms of news. Like ideally Thursday is looking like an amazing day because we're not seeing much in the charts, in the fundamental analysis. However, that will not stop me because it's only medium impact news. The only thing I'd ever stay out of is red news, very high impact news. So now looking at the 1 minute, what can I be seeing? We've got this supply zone. We've got so many points of liquidity here. This could be indicating something. We've got liquidity down here, huge area of liquidity. We have liquidity over here. More liquidity over here. We've had a liquidity sweep over here. More liquidity over here. Huge amounts of liquidity everywhere on this 1 minute chart. So we could see price coming down soon. Again, there is no obligation for price to come down, but we are kind of seeing that. So we could be looking at this sort of down push to grab liquidity once, because there was a liquidity above these highs. Bit of a range, maybe, just maybe, because there is also liquidity above. Maybe we could be looking at a grab of liquidity to the upside into this zone, seeing that kind of down move that grabs bottom liquidity over here, causing a break of structure. Then we could look to either from there break secondary structure over here with liquidity over here, and then come back up to that kind of supply zone that will be formed, and then that's where we'd enter, come back down, cause a new break of structure, and essentially move up from there. Or we could come all the way down to here or here. So we could look at one liquidity break or two. So there is a lot to see in the market today. Today is a good trading day in my opinion. There is some nice clean zones formed. I don't like it when there's too many supply zones or too much liquidity on charts. As long as the liquidity is clean, it's fine. However, I need those supply zones and demand zones to be quite minimal because it makes your chart a lot cleaner, especially when most of them are mitigated. We could also be looking at this area as an area, a zone. Yes, it's mitigated, but look, it's just a tap, and this is a 15-minute time frame. We do expect it to go lower, so we could expect that to be an inducement, maybe a break, come to around the middle of that zone before moving up again. However, the bullish pressure is so high, and I think if we were to do something like that, it could invalidate demand zones, because looking on the 4-hour, we'd be forming new lows, causing breaks of structure, and that's something we want to stay away from. Do we have any questions? No. Okay, good. Hope that was pretty self-explanatory. That's the main part, because we want our course to be clear. I will be sending out this chart analysis on the Forex channel. I'm just going to clear, in fact I'm going to leave that there. I'm just going to send this onto our Forex channel on the Discord, and you guys can play out this analysis the way you see fit. Keep in mind that I extend the valid zones to the right, and the mitigated zones I keep where they were mitigated. That's just to improve clarity on the chart, so I know what's mitigated and what's not. And also to keep in mind, we do have supply and demand zones in here. So again, we're just looking to come back down, grab liquidity, come into these sorts of points of interest. That'll probably be the first one, that'll be the second one. Push down, grab liquidity over here, come here and move back up, target this high. But personally, I would be targeting here, and potentially the top of the zone. I will be taking partial profits at this high because it's a weak high, and this area of liquidity, this is the only kind of area I'm looking for sells. So if we were to grab that liquidity and form and run these new lows, then we're in a clear supply control, so we would be looking only for sales in that case. But right now we're looking at bullish market structure and we're all good to go. So take care, I'll see you guys in the next call, and this analysis will be sent out in the Forex channel.